Hi everyone, and welcome back to the final more important chart appraisal for today, Wednesday the 6th of August, with me, Richard Perry, market analyst at Hand Tech Markets. And as ever, the final chart is gold. And the gold price, as per usual, has formed a little bit of upside due to the fact that increasing geopolitical tensions in Ukraine have hit markets. Now, the point that I think I should make is that I think that gold is beginning to now become less reactive to this to the events in Ukraine. In weeks gone by, you would have had, I think, a much more significant reaction to the upside on the Ukraine news, and it just leads me to suggest that these technicals that are leaving these lower highs on gold means that I think we're going to see further pressure on 1280. I think little bit disappointed in terms of how little the reaction to the upside we've had on gold this morning, considering the reaction that you've had on, say, equity markets in light of the news out of Ukraine. So that just leads me to suggest that there is possibly a selling opportunity to come out on this gold price. There's a significant amount of overhead resistance as well, a lot of horizontal lines, but these all depict levels of resistance. The first one initially at 1295, and then again at 1300, then 1305, then 1310. So a lot of overhead resistance that I believe will take down this gold price ultimately. Yes, you've had this reaction to the upside today, and you're actually on the intraday hourly chart. You're actually fairly neutral at the moment, but as I said, I think all this overhead resistance will ultimately tell on gold. And the fact is, on the daily chart, you're also now trading consistently below this 144-day moving average, which I believe is key. You've got all these successive lower highs in place. Momentum indicators also don't look overly great now. I think it all just suggests and points towards a retest of that 1280 mark in due course, which has held intact for the last few days, which is certainly a positive that the gold bulls can point to. But the only problem is, I believe, it is possibly now the only positive, certainly on the daily chart, that you can really point to. But anyway. The reaction that we've had to the upside, I think today could well be another chance to sell. You've got this falling 21-day moving average, which is now capping the gains. That comes in at 1304, so that continues to fall away. So it suggests that the upside potential within this rally is fairly limited. I think you could even, if you wanted to play it really near term, you could say that there is the prospect of a little minor rally towards that moving average, but I still think that we're going to see further downside back towards that 1280 point in due course. So if you do play it very near term on the intraday charts, I think you've got to be very careful that the pressure is generally tending to pull gold lower. Yeah, that's it. I wish you good luck in your trading on gold today, and I will speak to you tomorrow. Thank you.